Hello and a very warm welcome back to Trust TV. I am your host, Marcus De Silva. How do you see the American market performing in the next few years?
Bonds, are we on?
Yeah, bonds,
yeah. We remain fairly bullish. We think generally there's a lack of growth and lack of inflation. That front end has to come down aggressively, maybe to 0.5%, maybe close to zero, to steepen that curve up to get risk on. So you'd expect the front ends to perform pretty well. And it's a bit like an anchor pulling on a bit of string, if you like. You pull that front end down, I think it will pull a 10-year down as well. The long end is also fascinating because the long end is basically inflation expectations. And inflation expectations have fallen materially in the world in the last 6 months or so, generally, because it's very hard for these central banks to generate any inflation whatsoever. And some of the inflation we do see in the States tends to be in healthcare and education and other costs, which to many people are non-discretionary. You know, you've got to pay your healthcare costs, full stop. So if healthcare costs go up, that's bad inflation. You just have less money in your pocket at the end of the month. So I think people sometimes get a bit confused about inflation. The inflation most people speak about is there's too much demand in the economy, against supply, and that pushes up prices. We don't see that. What we tend to see, especially in the UK, is input inflation due to the weakness of sterling post-Brexit. So the cost of imported food and everything else we import has gone up. That doesn't mean that you can ask your boss for a pay rise. That essentially means that you just got less money in your pocket, and that's bad inflation. And it's just like tariff inflation, import inflation, lower exchange rates. It's bad inflation, if you like. It's like a tax. And it's a bit like the oil price going up. It's like a tax. You know, when you go to fill your car up next week, or the price of diesel's just gone up. So at the end of the month, you will have less money. The final point of inflation is, yes, we can see there is wage inflation completely, and we've written articles on this. So there is wage inflation in some parts of the States. Economic theory would say that wage inflation gets passed straight through onto what you're selling, a direct pass-through. The evidence and what we studied, with the exception of the odd industry, is virtually none of that wage inflation is getting passed through to final goods price or selling inflation. And I think it's that bit where the Phillips curve breaks down, and some of our competition misunderstand that. Why? Because transparency of the internet, it's hard to put prices up. Most of the companies have absorbed the cost of higher wages in cost cutting, automation, robotics, whatever. They just absorbed it in the margin. Some industries are different, but broadly speaking, that's why you haven't seen that pass through onto inflation.
Where does QE fit into this?
Well, it's coming back in Europe on the back of Draghi. He actually said that he would do QE essentially unlimited, or he will keep doing QE until he gets a robust convergence at or close to 2% inflation target, which of course is comedy because they've never ever been anywhere near their inflation target in Europe. Generally it's around 1% on a good period. So they lack credibility. The surprise, as we were speaking earlier, is I think QE hasn't created the inflation that most people would have predicted. Kind of because people don't want to borrow money with low interest rates, that's kind of the idea. People want to pay off debt, even though borrowing is very cheap. And that's back to that sort of Larry Summers secular stagnation thesis I spoke about. So yeah, I think the Europeans could be doing QE for years and years and years. And that's good for corporate bonds.
John Pattullo, that's all we've got time for today. Thank you very much for joining us in the studio. Now, apologies if we didn't get round to your question, but if you would like them answered, then please email investment.trusts@janicehenderson.com, and the managers will respond as soon as they are available to do so. Until next time, goodbye.